Alright everyone, welcome back to the channel for another TA episode on Bitcoin. In today's episode we're going to be updating the stock market blues. If you're new to the channel, warm welcome. This is a series where we look at what's going on in the stock market. Specifically, we're going to be looking at the DXY US dollar index. We're going to be looking at index funds like the SPX, NASDAQ, SPY, and we look at these stocks and the stock market and we correlate them and talk about how this is likely to affect Bitcoin, hence the name Bitcoin, the stock market blues. With that being said, let's jump right into today's video. So right off the back, let's start off with the OG daddy of all index funds, the SPX. When we are looking at the SPX, you can see this has been open for approximately about half an hour or so, and the markets have been getting absolutely decimated since the SPX has opened. And if you can see up at the top right of my screen, you may notice that I do have my Femex open, and that is because I've been shorting Solana. I've been shorting mainly Solana. I do short Bitcoin every now and then. I like to short Solana because it's almost very easy and it's very highly reactive, so it's very quick to have these nice trends. Nonetheless, I won't be talking about Solana in this video. It is looking like it is time to be once again setting up shorts. I have been talking about this for the past couple of weeks. The SPX is massively heading to the downside. I know I'm looking at the 5-minute time frame. I'm really here to show you that we have had a price gap and we are moving to the downside. Now, why is it important that we've got a price gap? Well, we see it time over time when we're looking at the NASDAQ. We see it when we're looking at the SPY. I'll specifically show you with the SPY. What happens when we have a price gap in a particular direction? Let's say at this moment in time, we were breaking down, we had a price gap, and we opened the gap lower than all the way up here. So we basically had a breakdown price gap and we saw continuation all the way down here. We had a dead cat bounce. What do we do again? We had another price gap in the downwards direction, and we proceeded to move to the downside for about another 24 hours or so before we started moving back up. What happened once we filled this diamond bottom formation? Well, we had a price gap to the upside. What do you think happened after we had a price gap to the upside, and we had another price gap to the upside and another price gap to the upside? As you can see, it always, I don't want to say always, I take that back. We almost always have continuation in the direction that we gap. So why is this important? Once again, we're having a massive gap to the downside today. This highlights that basically retail confidence, consumer confidence is absolutely through the floorboards right now. People are petrified with what's going on in the economy. I've been talking about this over on my Twitter specifically, so we're going to head over to some slight news before we jump back in the charts. If you do want to follow me over on Twitter, once again, I am going to shamelessly plug this at 618_cowboy. If you do want to follow me, I share daily news, analysis, and memes. So let's jump into what I've been talking about now. I specifically made comments to the inflation in Spain in the past couple of days. Spain's CPI, which is the Consumer Price Index, is its highest that it's ever been in 37 years, coming up to 10.2%. I basically said, in my opinion, it's very likely for the ECB, which is the European Central Bank, to continue with its interest rate hikes, just like we've been seeing in Europe, just like we've been seeing in the US. And as you can imagine, you know, specifically everyone looks at the US hikes when we look at the FOMC meetings. The past couple of FOMC meetings, we've been seeing interest rate hike after interest rate hike, and that's why these markets have been collapsing. When you raise the interest rates, it makes it more costly for businesses, traders, whatever you have it, to borrow money. If you're a business and if you're a small business starting up, it makes it very hard to borrow money and expand your business. So it's basically harder on everyone, and traders like Michael Saylor that use leverage to buy up Bitcoin and subsequently push up the price, it's becoming harder for them to borrow money with the interest rate hikes going through the roof. But what you can see is inflation is running rampant all over Europe right now, especially in Spain. A lot of people are getting out of bed recently talking about the decrease in German inflation. People are saying this is bullish news. I would just like to highlight, if you are going to be talking about, you know, German inflation going down for like a small period of time, you should probably look at the CPI in all of Europe, because Germany is just one country in Europe. And if we look at, you know, Italy, we look at France, we look at Spain, all of these inflation, all of the CPI, which is the Consumer Price Index, measuring a basket of goods for the common consumer, is going through the roof. The ECB is very, very likely to keep on increasing the interest rates. The US inflation is going through the roof as well. So like I said, it's very, very likely we keep on getting interest rate hikes. I imagine in the next month we're going to be in a confirmed recession. I will keep you updated on that over on my channel. Once again, if you do want to follow me over on Twitter, it is here at 618_cowboy. Now, like I've been saying, the markets are really, really not looking good today. You can see Bitcoin is reacting very, very strongly to this. I did talk about a couple of new price predictions over on my YouTube channel. So if you do want my specific TA just for Bitcoin, where we're not really focusing on the stock market, then go check out my previous video. Like I said, this is where we talk about the stock market in correlation to Bitcoin. I've already posted a Bitcoin TA episode today, so if you want my full thoughts on that, go check it out. Let's continue. So SPY is heading down, the squeeze mom, which is our momentum indicators, are heading down, the MACD is heading down. We're getting bearish continuation over on the MACD. And when we are flipping to the downside, we are now below the heart line. We had a dead cat bounce and a fake out on the MACD, and this was a fake out below the heart line. So basically all signs point to more downwards momentum. Let's move over to the total, which is the total cryptocurrency market cap. Now, this is massively, massively legging to the downside right now. You know, the best way to look at this is probably to head over to my Brave browser. If we check out the total crypto market cap, just like we've been predicting for a while, we said that we were going to break below the 618. We said that we were going to come all the way down to the 300 week, and you know, we're almost down here. There's really not too far to go. We've only got about another 22% to the downside before we have hit this target on the head. It looks like, coming over to the daily time frame, we are currently capitulating below the 200-week moving average for the second time. So if you think that this is bloody, what we've seen right now, if you think that, you know, because we're dumping so hard today, momentum must be subsiding, right? Well, I think a lot of people thought that when we were capitulating below the 618 Fibonacci. They were probably thinking, you know, this can't get too much more bloody. We've had multiple days in a row. But the fact of the matter is, when you break below these major areas of support, like the 618 fib, the 786 fib, which we aren't currently down to at this moment in time, I should say, but the 200 week is a massive, massive macro moving average, and the fact that we are capitulating below it today, the fact that we are forming another bear flag, the fact that we're in a red-green-red formation heading down to hell, really doesn't look good for the total crypto market cap. Total 2 as well is probably, yeah, this is really not looking good either. I mean, this is coming down to the 786. You've got a slightly more micro 786 Fibonacci right here, which we are currently hugging at this moment in time. So you can imagine altcoins are definitely going to get decimated if we do continue to head down. If the stock market continues to head down, then we're very likely to see this continuation as well. The dollar, we've been talking about this a lot in the past couple of weeks, but the dollar is on an absolute rampage right now. If we extrapolate this back, you can see we've formed a handle and a massive cup. So this is a cup and handle pattern. This is a bullish pattern. We consolidated for like a month or so. This was when everyone was getting bearish. You know, people were saying, you know, the dollar's going down, the bull market's coming back. We were simply forming a bullish handle for a cup and handle pattern. And where's the price target for this? In my opinion, it makes sense to draw our Fibonacci's from our low to the high. Talk about this increase up to the 1.618. We've been predicting this for a while. We're just moving up day over day over day. So it looks like the dollar probably has about another 6% to move up to the upside. So contrary to popular belief, cash is really king right now. And bear in mind, the DXY is basically just how the dollar is measuring against other fiat currencies. So, you know, don't think necessarily that the dollar will be king forever, because the dollar is trash. It's just outperforming other fiat currencies at this moment in time. But subsequently, the DXY goes up. It just doesn't look good for the economy. So once again, NASDAQ is massively heading down. SPY is massively heading down. The SPX is massively heading down. If we look at a couple of other tech stocks as well, so we talked about Bitcoin. Once again, if you want my TA on Bitcoin, I did make a separate video about that earlier on today. Let's look at what individual stocks are doing today. Google down 4% today. I mean, take that with a grain of salt, because Bitcoin's down 6%. Google's down 4%, which should mean that Bitcoin should probably be getting hit a lot harder than it currently is. We can see Tesla almost down 3% on the day. All of these tech stocks, all of these all of these stocks anyway are just massively gapping to the downside. I mostly cover tech stocks anyway, because I think they've got a high correlation to the crypto markets, rather than looking at things like Airbnb and whatnot. But nonetheless, looking at Airbnb, this is down 7.5% today. Apple is almost down 4%. So you got massive companies with a much higher market cap than Bitcoin, and they are getting decimated at this moment in time. Netflix down 4%. You can attribute this to their increase in prices recently, but nonetheless, everything's going down. Microsoft is heading down. Gold is heading down, and Coinbase stock is down 10% today. If we look at the daily time frame for Coinbase stock, it looks like we're about to have a bearish MACD flip anytime soon. Our momentum indicators are massively heading down, so it's really just not looking good for the markets right now. It looks like this was a mini head and shoulders breakdown, and this is looking like a big old M pattern. So once again, I would like to highlight, yes, the markets do seem exceptionally bloody right now. Yes, you know, a lot of people would very much like to believe the bottom is in, or has been in for, you know, a prolonged period of time. But the fact of the matter is, look at inflation, look at what the Fed's doing. The Fed's hawkish, inflation's through the roof, the cost of money is going up, the stock market's going down. You've got things like Google, Tesla, you know, Netflix, Apple, the NASDAQ, SPY, SPX. All of these stocks are completely getting decimated. So I do think we've got lower to go. I think Bitcoin has lower to go. If you watch my previous Bitcoin TA video, you'll know why I'm targeting these levels. But 18,500, 16,500, and 14,000. Technically, there is a target down here at 12,000. If you do want to know why, then be sure to go out and check my previous Bitcoin video titled Bitcoin to 12K. I don't necessarily think we will go that low. Nonetheless, the TA does say that we will, and it is an interesting pattern that is playing out at this moment in time anyway. So as always, my friends, that is all I've got for this episode, Bitcoin, the stock market blues. I hope this video gave you some insight in what to expect in the market next, and I hope you found some value in today's content. As always, Cowboy out. Peace.